Hi, and welcome to this week's Monday Mortgage Moment. This month we were focusing on first-time home buyers, but I really feel that given all of what's going on with mortgage rates and stress testing and the coronavirus and all of that, I thought I'd just take the opportunity today to talk to you a little bit about some of the changes that have happened, specifically how they refer to mortgages and interest rates. So as many of you saw or heard a couple of weeks ago when the Bank of Canada met at their normal meeting time, they did choose to drop the overnight lending rate by 0.5% or 50 basis points. The nice thing about that was that most of the major banks passed on that savings to the end consumer. So oftentimes when the Bank of Canada sets their overnight lending rate, that is the interest rate that they charge financial institutions to hold money there. Financial institutions don't have to share that savings with the general public, and oftentimes they will share it, but maybe a portion of it. So for instance, when the Bank of Canada dropped the prime rate by 50 basis points, the banks could have turned around and dropped theirs by, say, 30 or 35. In that particular case, the overnight lending rate dropped by 0.5%, and the banks passed that 0.5% on. The immediate impact that we saw was that mortgage rates actually went down, prime rate went down. So for those of you who borrow on a home equity line of credit, or maybe you have a variable rate mortgage that will change as prime changes, that would have been an immediate cost savings to you. For people that are already in a fixed term, obviously that's not going to affect you until such time that you either refinance your mortgage or it comes up for renewal. So then following the Bank of Canada meeting, as an emergency measure to try and buffer the economy with everything that's been going on with the coronavirus and the potential economic impact, the Bank of Canada dropped the overnight lending rate by another 50 basis points. Now, that actually didn't have as much of an impact as you would think, or as the initial one did. What we actually saw with some of our mortgage lenders was that the 5-year rate was actually being increased with a lot of lenders. And the reason that happens is that 5-year mortgage rates are calculated based on bond rates. And oftentimes when there's economic uncertainty, people tend to get out of the stock market and start buying bonds. So when bond yields increase, that tends to mean that 5-year mortgages do too. So I know this is a lot of information and it's really confusing, but suffice it to say that overall rates are still fairly low. Hang tight and don't panic with everything that's going on. Stock markets do react to these kinds of things, and the impact is immediate, but they do tend to even out over time. The other piece of news that I wanted to pass on was that there was an announcement earlier in the month that the government was going to readdress how they calculate the stress test rate. So the stress test is the rate that you actually have to qualify for on a mortgage. So typically it's supposed to be around 2% higher than the standard 5-year mortgage rate. The problem that they were finding was that it was always set at a fixed amount. So it did drop a few months ago to 5.19, and it's the first time that that's actually dropped since the stress test came out. But we are seeing 5-year mortgage rates around the 2.8 mark. So obviously a stress test rate of 5.19 gives that buffer of 2% plus more. So what the intention was as of April 6th was that they were going to make the stress test more reactive to current rates. So it was going to be more of a flexible rate as opposed to we're going to fix it now and then maybe we'll look at it in 3 or 4 months. They have put those changes on hold right now. So as of right now, there are no impending changes to the stress test. The rate is remaining at 5.19, and we don't know if and when that's going to change. So For a lot of people that might have been holding off on applying for a mortgage, whether you're refinancing, buying your first home, if you were holding off because of the potential changes to the stress test, those have been put on hold again. So we don't know when those will be revisited. So in the meantime, if you are struggling for whatever reason, maybe you can't work because you have your kids at home for 3 weeks, or maybe you've got additional costs because of daycare, please, please, please reach out to your mortgage company. Many financial institutions and mortgage lenders have policies and procedures in place that can help you out in times like these. They may allow you to skip a payment or cap your interest to the end of the mortgage. Most of them are more than willing to talk to you and work through your situation. So if you are getting a little panicked about, things getting tight financially, please reach out to your mortgage lender. And if you have dealt with a mortgage broker to put your mortgage in place, reach out to them and they can definitely give you some advice on how to best handle your situation. My name is Brenda Sainamond. I am a mortgage agent with Mortgage Sense here in Barrie. I hope that you are healthy and happy and trying to stay calm in these turbulent times. Again, any questions, any concerns, please feel free to reach out. I am working from home a little bit more, as many of you are, but still in front of the computer, still on the phone, still available if you need me. So hope you're having a great Monday. Thanks for tuning in and take care.